Good morning and welcome to the Market Forecast. Today is Wednesday, July the 21st. I'm John Hoagland. Thanks for trusting me with your time. If you're already in the markets, hopefully things are going your way. As always, we're going to be looking for accurate context, good risk management, and to exercise patience. This morning, no major economic numbers due out except for the 9:30 EIA crude inventories report. Big day at Top Step here, though. Today is, of course, group coaching. I'm going to put the link in so you can sign up for that if you'd like. Got a couple of good emailed in questions, but of course, I'll be taking questions on the fly. Nobody knows everything. I'm going to be honest with you, I don't. But if I do know, I'm going to tell you. And if I don't, maybe we'll learn something together. So I'll look forward to seeing you there. Also at 3 o'clock today, we've got a special session with Michael Patak, the founder and chief visionary officer at Top Step. He's going to be here to answer any and all of your questions. We're looking forward to seeing Michael on screen this afternoon. There will be no recap because of that, but it'll be good to see our good founder on screen and ready to answer your questions. Again, that's 3 o'clock today. You can find that, of course, on our YouTube channel. You should probably subscribe and look and then check notifications so you get notifications when we do go live. As usual, just going to kind of look over what's going on in the world a little bit. And it looks like Netflix beat expectations yesterday, but lost about 430,000 subscribers. Not good news, and that was all in North America. U.S. equity markets are mixed early today as earnings start to ramp up speed. Notables already out this morning. Johnson & Johnson beat expectations. Coca-Cola, Verizon, and Harley-Davidson all beating expectations. Nothing huge after the close today. We've got Equifax and Whirlpool, but we're in the throes of earnings season. We got to keep an eye on those. As far as crude oil is concerned, it seems to be digesting pretty well here, where you get a nice little move to the upside happening here. It looks like right on the opening. We saw the first inventory slide, a drop in inventory by the API of 800,000 barrels, but the EIA is looking for a more of a draw of 4.1 million barrel draw. So we're going to have to see how that plays out for us. But for now, it's recovering very nicely after losing about 10% of price over the last couple of weeks. As always, make sure you smash that lucky like button and, suggestions, comments, questions, feedback, heckling, they're all welcome here. And make sure you subscribe again to our YouTube channel so you get notifications when we do go live. A quick look at the VIX a few minutes ago, down about 4%, 1897, as the equities continue to recover from the recent losses. The VIX continues to slide to the downside. Dollar index holding up above that 93 level at 93.08. And the 10-year yield, a little bit of an uptick last night, 1.23%. Last I checked. As always, I'd like to say good morning to everyone. I've got Brian here, first one in the room. You win the prize. Murph, always so positive. Good morning. Hope everyone is having a great week. Keep the momentum going. Absolutely, that is what we are all looking to do. Ed Nelson, good morning. Tone Caesar, your good morning. Tanya, good to see you this morning, Tanya. Danielle, Daniel, I should say. Tim, Zarain, Jim, Drones Over Texas made it on time today. Good to see you, Drones. Greg H., good morning. Micah, good morning. I hope everybody is all right. There's the link for group coaching. Jerry is awake, and I hope John is too. Harry Gordon, good morning. Looking forward to my daily wisdom. Well, that's very kind of you. We just take a look at what we're seeing, and then, of course, group coaching today as well. The Chef Magallanes is here. Norman, good morning. Up 6K so far. Wow, looking to add a little more. That's a heck of an overnight session there, Norman. Laura, Ryan, Vince, James, Fred Decker. Fred Decker's in the room. Crude oil closed with a late spike yesterday and gapped open higher today. Would today be a good day to look for an opening range trade in CL? Well, it looks like maybe. We've already past that time, Fred. I'm just happy to see you. It's really great to have your presence here at Top Step again. We're very happy to have you here. And yes, it would be a potential good day for an opening range trade in crude. As a matter of fact, I'm going to try and do something here and see if we have left the opening range at the extreme. Good eye, though. Fred with the late spike. It's not working. Hang on a second, folks. Okay. Can't tell if I'm going now or not. Looks like I'm live. Okay, we are back. I apologize for that, ladies and gentlemen. Let's go ahead and jump into the charts and let's see what's going on in crude oil. Nico, Ainge, good to see you. Beetlejuice, good to see you. Tone. All right, we're back now. All right, so at least I've got solid charts this morning. Hopefully, I didn't just wake up any gremlins. But here's crude oil. We've seen the big drop to the downside. We're all almost done with rollover. We lost 24,000 contracts in open interest yesterday. All of them in the August contract. There's a very little change in open interest yesterday, minus the expiring contract. All eyes are going to be on the EIA, looking for a 4.4 million barrel drop. We've cleaned up a little bit of dirty laundry down here in coming back down and rechecking this naked point of control. We're starting to recover. Of course, everything is going to be dependent on the EIA and crude oil this morning. So taking a look, doesn't look too much like you can't really tell if we had an opening range trade or not. But yes, this late spike and closing, in that late spike says if we open in the late spike or above, we are accepting higher pricing. After a big loss like that, it doesn't surprise me. Looks like we're probably due for a pullback. So we've got the settlement price right here, 67.20. We're holding some longs here. It doesn't surprise me after a drop like this. We've got weekly kickoff high just above, which is 68.90. It was a little bit supportive before the big break 2 days ago on Monday, and it looks like this could be kind of a supply area. It was a kind of a demand area for a period, but that broke. If we get back up there, there might be some fish up there for us. So I'm going to be, trying to stay patient. Yes, we're out of balance. There may be or may not be an opening range trade for us here. You have to look at the 1 minute, but it looks like we've got some overnight longs. Might be getting a little bit nervous. If I'm going to be looking to buy in this market, I'm going to be trying to look for some sort of a pullback, which might be provided by our overnight longs. Our overnight longs may just pull this market back. If we can't close the gap relatively early, that's going to be our shot to look for a move to the upside. Again, up above, looking at weekly kickoff high as a potential area to find some fish up there. And the E-mini S&Ps. All right, so we cleaned up a lot of weakness Monday. All of these naked points of control and gaps got taken out in regular trading hours. They are no longer part of the equation. We cleaned up a lot of unfinished business down here, and you can see this market is primed to it's seeming like it wants to go right back to the upside grind. There's things going on in Congress. There's a lot of infighting going on with this infrastructure bill that's under debate. There are some headline risks to this, of course, and any inflationary rhetoric from any talking feds could derail things, of course. But we have to trade what we see, and it's looking like we've got a nice recovery. When you take a look at the past here we have a really big down day followed by a really big up day. The market continues to move up. We have a really big down day followed by a really big up day. The market starts to move up. We have a big down day followed by a big up day. We knew that the auction was getting a little bit tired up here. We're looking for another pullback, and this might just be the pullback we were going to get. We cleaned up a lot of business down below. We got a big down day, another big up day. Are we just going to continue this process of a grind higher, a pullback, a big up day, and then grinding higher? It's not unreasonable to expect that. Overnight open interest, we added 18,000. So that's encouraging for money available to come back in and keep this market moving to the upside. Take a look at the 30-minute chart now. Okay, we cleaned up all this. Got another naked point of control here. We got another naked point of control here. We're back above weekly kickoff low of 4,300. What are we looking at as far as daily information, short time frame information? We don't really have any overnight inventory to speak of. We're basically trading at or near settlement. We did look a little bit higher here. This is there's a naked point of control that could come into play today. So opening in range and in value usually tells me to try and stay patient and look for opportunities as the day goes on. I'm looking for confluence here. We've got settlement and point of control and last week's low right in the neighborhood here. So there may be some opportunity here. There may be some fish. There may also be some fish down at weekly kickoff low at this naked point of control up here. And if we can continue this march to the upside, a really reasonable target could be 43.60. You know that the weekly kickoff levels are very close together, probably because we were expecting some sort of change or pullback. Well, we got it. Happened in the overnight. Support, support, support. Bang. We break support. We head to the downside, back above that level. If we approach it, perhaps another opportunity for us to find some fish. All right. So yesterday I saw a question in the chat here about gaps. So here's the story with gaps. Crude oil just opened, so we're going to put our profile on there. A gap is when regular trading hours open outside of the previous day's regular trading hour range. So in crude oil, we have a gap. If gaps don't get closed relatively early, and I understand that's a subjective term, it's going to mark acceptance of higher pricing, and we're going to look for opportunities to continue to see price moving higher. Anything can happen. If we close the gap, that doesn't necessarily mean that that's a deal breaker, especially in this situation with the late spike that occurred near the close yesterday. But when we open with gaps, it tells us that the market is opening out of previous day's balance. It might mean that we can expect a larger opportunity, and it should keep us kind of on notice that the best trade location may come early in the day. Opening range trade is a very good example of that. If the opening range is the high of the session and we start moving lower, that's a pretty good probability that this market is going to attempt to come down and close the gap. So we would look for an opportunity at that opening range if it were the high of the session to take that short and see if we can do that. Now, it doesn't look as though that is going to be the case. I don't think that we have the opening range at either the high nor the low here, but as long as we can't close the gap relatively early, it keeps us on the alert to look for opportunities to buy weakness. So there's a little explanation about gaps. The NASDAQ, I don't think we really touched on here yet. NASDAQ has maintained a stronger kind of look to it, if you will. We really did not accept anything below weekly kickoff low while we attempted to accept it in the S&Ps. It seems to be kind of falling into somewhat of a digestive state here, and that's okay because that's going to help us even inventory for a continuation to the upside or even for a continuation to the downside. Weekly kickoff highs and lows have been tested the last 2 weeks. They haven't changed in a couple of weeks. We tested the high of it last week. We tested the low of it this week. We're in the middle of it. We're in a digestive state. We could be actually building a bull flag. If we accept outside of this channel to the upside, that's going to confirm that this is a bull flag and we can look for continuation back to the upside. It is likely that we are going to be in short time frame control in this market because again, we're largely in a digestive state. That could change, especially upon acceptance above this little trend line we've got here, the high of the bull flag. 30-minute chart. So again, similar to the S&Ps, no real overnight inventory. Settlement is 14,722.75. Put that on your charts. It's right near point of control. The market really just found balance after it's pushed to the upside. Now it's kind of digesting what's happened over the last couple of days. It's expended a lot of energy, as has the E-mini S&Ps. Here's our look to weekly kickoff low that happened on Monday, rejecting. Nice recovery yesterday. We're in range and in value. Where is there any confluence that we're seeing here? The only real confluence that I'm seeing is point of control and settlement are very close together. We've got last week's low here, probably not going to be that much of a support or resistance factor. We've already been through it a couple of times. Value low, value high, overnight low, overnight high. Overnight low I kind of like because it is kind of confluent, if you will, with last week's low, but going to have to try and stay patient. Opening in range and in value indicates potential better trade locations as the day goes on. Gold's giving me fits this morning. So as in the longer time frame, we are approaching the lower edge of where we've been rejecting prices this low for 1, 2, 3, 4, 5, 6, a couple of weeks now. We're largely digestive. We're inside weekly kickoff high and low. Again, a test of it last week, no test of it yet this week. Last week's low in the neighborhood. But it's in a digestive state. It's getting to where it has been proving to be a little too cheap. So we look to buy opportunities to buy weakness in this case, and we look for opportunities to limit risk according to past information. We added 4,300 in open interest in kind of a neutral type of day yesterday. We opened and had left the opening range the low of the session, which was the low of the overnight session as well. That's been taken out, and we've got a little bit of gap rules going here. So let's take a look here. Here's yesterday's low. Here's the initial opening range, which was the low of the session. We've looked down below it. We see some one-time framing activity moving away from yesterday's range and value. I don't really want to fight that until there's some sort of structure to lean on. And we're starting to perhaps see a little bit of a falling in momentum here with the whole moving averages now holding largely below price. The way to manage risk is, our overnight low is the low of the regular, well, was the low of the regular trading hours session. This was, an opportunity. We probably could have gotten stopped out on this, but we're near an area of previous rejection of price. If we're rejected again, buying pullbacks down in this area could give us the opportunity to profit from a move back towards settlement, as we are holding some, I would say, light overnight shorts. Take a look at the euro. And then we'll get on to the 10-year. Frederico, thanks for coming. Grind lower is following structure. Okay, we started taking out last week's lows. We've been probing lower and lower. We're one-time framing lower. We're getting a little bit cheap, though. Is according to weekly kickoff range here. Weekly kickoff low, largely this previous swing low. So we'll be looking for. I'm going to be kind of on alert for some sort of pullback in the opposite direction. Obviously, lower lows, lower highs. We're getting a little bit cheap. I'm going to be really kind of on alert if I'm short as to anything that's going to start any fires to the upside, if you will. And as far as the 30-minute chart today, we were mixed as far as overnight inventory settlements up here, 117.94 and a half. Again, in range, in value, look for some sort of confluence to see if you can find some fish there. Our overnight low does look interesting because it was rejected. It's below yesterday's low. If we get the chance down here, there may be some fish. We've got a little bit of confluence with yesterday's low and our overnight low in this area. But again, opening in range and in value suggests to me that I got to stay patient, wait for an opportunity that gives me good trade location, that I can manage risk. If I'm going to be trading here, I've got all kinds of risk in either direction. I got to stay patient. Better trade location is likely to come later in the session when we open inside value. Into the 10-year. All right. Frederico noticing it's got a nice head and shoulders on the 30-minute chart. We'll take a look at that shortly. We did find some sellers yesterday. This long pin bar is representing on the daily chart as excess. We didn't quite get to the measured move that we were looking towards to the upside, which unable to reach that is kind of important information. We've got a little bit of an uptick in yields. The market heading to the downside. Let's take a look at the 30-minute. We'll see the head and shoulders. Here it is. Very nice. Shoulder, head, shoulder. You go from the base of the neckline to the top of the head. That's your measured move. Let's see if this plays out. I'm going to leave this line on here. So here's the neckline base. Okay, now here's the breakout of the neckline here. Could take us all the way back down to here. Now, I'm going to leave this on here so we can watch this and see what happens tomorrow. We do have some things in the way. We've got a weekly kickoff high here, 134.03, that may bring some support. There is a gap that takes us down into where this measured move could take us. This is going to be a pivotal area, this weekly kickoff low here. It is almost picture perfect, right? That's I might even save that for future use. that is a good one. We added again 13,000 in open interest on an up day with a down move. We closed about even, but the market looked higher. We brought in volume back into the downside. I'm thinking though that open interest addition is more shorts than new longs. All right. So again, big day in the markets as always. Go find your opportunities. Get out there and find those fish. And a big day at Top Step. Again, group coaching today at 1 o'clock and Q&A with founder Michael Patak at 3 o'clock, which is going to be good to see. And we will know recap today because of the Q&A with Michael. But I will see you back here tomorrow morning. God, it's going to be Thursday already tomorrow. Unbelievable. See you back here tomorrow morning, 8 o'clock Central for the market forecast. Until then, get out there and profit. Have a great trading day. Trade well, and we'll see you soon.